A lot to unpack here, but let's start with that headline result first. A $3.2 billion cash profit, excluding restructuring costs. But once you bring those in, the number falls down to about $2.8 billion. Are you satisfied with this result?
Well, I think we always said that with the restructuring that we were going to do and a major and bold step forward to transform and simplify the bank and grow the bank, that we advised investors to look through that restructuring provision. So the 3.2 is more the underlying result. And when you look at return on equity, that's still a very competitive number. So the absolute number at 3.2 is good. We would like it to improve over time, of course, for our shareholders. But the ROE is also really encouraging. So I think return on capital, we focused on that, and that's continued to be, one of our highlights.
Yeah, well, one of the big pieces of news of that restructuring, of course, exiting the MLC business, the wealth, advice and superannuation business. Why are you getting out of that? Yeah,
I think this is a clear and good question from investors that we're getting, and we have to go back half a step. What we've become very disciplined on is where capital gets allocated and how we simplify the bank in order to grow it. We have a wonderful business and private bank, also consumer bank. We see great opportunities in corporate institutional infrastructure and renewables and investor. And whilst we think wealth products and services are important for our clients, we see the MLC business as probably doing better under its own ownership than in the bank. Where it's smaller, it's only 4% of our cash earnings, and it does increase the complexity in the bank. So really, to simplify the bank and focus on the core, which has excellent prospects for us, we've decided to divest MLC, although we've said that that's going to take us to the end of the 2019 calendar year. It's obviously a complex separation, and we've said that it'll be through public markets, a demerger, an IPO, maybe a trade sale. So now we can get out and work on that. But the important thing is that for our clients, they will still get, through JB Were and NAB Trade, wealth products and services, and ultimately through a partnership we enter for our sort of mainstream clients, they will still have access to advice.
Well, I've no doubt that a lot of planning went into this, but you've got to admit the timing's pretty interesting, isn't it? With the Royal Commission going on at the moment, there's terrible revelations coming out of people losing their superannuation savings. Is this business also just too hopelessly tainted to make it worthwhile?
Oh, no, I think what you're seeing in the Royal Commission, which I think is going to be a real catalyst for change in our industry, and I think it does give us a burning platform. And I have been a proud banker for over 30 years, and some of the things that I see in our own bank that we've acknowledged as part of the Royal Commission, I'm ashamed of. But a lot of those are genuine mistakes because of the complexity of the bank, which is where our investment program goes to address that, to simplify it. We have a few people, and it's small in number, who have broken the law and committed fraud, and they obviously need to be facing the consequences of that. But the misconduct is different to the good conduct that I see every day in the bank. But this business still is a good business. It's making well over $200 million annualised profit. It's got really good platforms. It's got good market share in corporate superannuation. It's got 1,200 advisors. I think it's still a good business that's got good growth prospects.
Sounds like a little bit of a sales pitch there for MLC. What's your plan? You want to float it, or do you want to sell it? And if so, you're going to recoup the money that you spent when you bought it in 2000?
Well, we have said we now need to investigate the options. It's a major disclosure event, obviously, and we've done that today at the half-year results. Now we have to go through a process which will be thorough to look at the options to actually divest it, whether it's by way of a demerger or a portion of it an IPO, or whether a trade sale is possible. So I think as we go through the next 6 months, I'll be able to give a much more detailed update. It will take us some time because it's quite a large asset, but we will now go through that process to look at the way to do it.
Yeah, you have been doing a lot of restructuring, as you mentioned in the beginning. This is part of it. I think 1,000 jobs have been cut as well. You're looking for other opportunities to streamline?
Well, I think there's a huge opportunity for the bank to become simpler, to automate, to reduce the number of products, to simplify technology. So the investment we're making is designed to do that. And we do see growth prospects. If you look at our 4 key strategies, the best business bank, new and emerging growth opportunities, Western Sydney, Greater Melbourne because of population growth, our direct bank, UBank, private bank, JB Were, infrastructure finance, we have really good growth opportunities. Simpler and faster, and then great leaders, talent and culture. So we do see growth opportunities, but we need to invest to be able to get at it, to simplify the bank. And I think out of the back of that, there'll be less people in the bank, and there'll be different people. And that's one of the things that we're explaining, that we need to hire more data scientists and engineers and coders and digital people who can really help us create the bank of the future. And as we automate, we'll need less people doing traditional banking.
Yeah, well, the industry is changing, and this is something that ANZ CEO Shane Elliott said to us earlier in the week. He foreshadowed a tougher second half, and he also said that this 2-decade-long golden age of banking, he called it, in Australia is over. Is that a view you would share?
Well, I think the new era of banking is going to be very different. Yeah, and I think we've had significant growth, but I think culture, focusing back on customers, focusing on the community, and moving away from it all being about numbers to being about people. I mean, that's how I started in banking. That's what I love about banking. And when I meet people going up and down the lift in our bank, that's what people are here for. So we need to get back to focusing on the basics, simplify our product set, automate things so that people enjoy coming to work and enjoy serving our clients. So I still see longer term good growth. Look at the Australian economy. Population growth, low rates, low unemployment. We're on the doorstep of Asia. We're the largest business bank. SME growth is starting to return. So I see significant growth prospects, but only if we simplify the bank to make it easier for our staff to serve our clients.
So the golden age could run a little longer?
Yeah, I think so, but I think we're going to have to go back to basics on some things. But I still see some good growth prospects for us.